Dustin, really good to see you. We're kind of diving into the headlines with this question. Should I invest in gold? Investors who are concerned about a recession or market volatility are putting their money in safe havens, and gold is usually seen as a safe haven when markets and economies are facing headwinds. And during periods of high inflation, gold is often seen as a hedge. What do you think?
Yeah, historically, gold has served as a great hedge to an investment portfolio. That said, I want to make this clear. If you're listening to a podcast or you're watching a YouTube video and they're talking about the virtues of buying gold, and then they go to commercial break and lead directly into an advertisement for gold, you may not be getting unbiased investment advice. And there are probably
Right.
some additional considerations you want to take into account.
Right. So we are, of course, living in uncertain times right now. Does investing in gold make sense for today?
I think we probably want to make a distinction between a hedge and an investment. Uh, Gold has historically been negatively correlated to stocks, meaning oftentimes it moves in opposite directions. So, as part of an investment portfolio, gold can be an outstanding a hedge, a form of insurance, or a diversifier. As an investment, in my opinion, gold's not very attractive. And that's just for the simple reason that gold doesn't produce any profits. It doesn't produce any dividends, any interest, or any coupon payments. So
Hmm.
as an investment, the only way you can make any money off of gold is basically speculating on the price.
Right.
And a lot of people look at gold as a safe haven, and again, it can serve that purpose as a hedge. But understand, in the short run, gold can be just as volatile as stocks or any other commodity.
Right. And we'll get into that in a second. I want to talk this through though. When investors fear investing in stocks, they do flock to gold, which of course increases its value. Since we may still see a recession, should I buy gold now and beat the herd?
Again, you might want a small position in gold as a hedge in your portfolio, and you don't have to have a very large position for it to serve that purpose. But I think it's really important right now that we consider the economic environment we're in, specifically interest rates. We can look at the run gold has had over the last 20 years, a great run. But remember, for most of that time, we've had real interest rates that were near zero. Okay,
Hmm.
that's no longer the case. It used to not be a big deal that gold didn't pay you any interest or any dividends because, hey, you couldn't earn any interest on cash or most bonds anyway. Well, now that you can earn attractive interest rates on cash and on fixed income, that makes those asset classes relatively more attractive as a hedge or a safe haven than gold is.
Hmm. So now let's talk through then if somebody is interested in investing in gold. And I want to show you this, Dustin, while we ask this question. This just came across my news feed. Costco selling gold bars, and they're selling out within just a few hours. These are the actual bars. So how do I invest in gold? Is you mentioned ETFs for a portfolio. How about buying gold bars?
Yeah, I mean, you can buy physical gold. I mean, typically the way people would do that most of the time is they'd call a broker. They'd send a wire transfer to that broker, and then they'd wait, maybe a week to get those metals. So when we look at something like an ETF, we've got a couple of big advantages. One is the fact that ETF can be traded daily. Okay, so there's a bit of a process to go through. Oftentimes, buying that gold or those precious metals, if you're buying physical metals, and then selling those physical metals. Typically, if you want to sell those metals, you've got to contact a broker, lock in a price, and then prepare an insured shipment and wait for the post office to get that shipment to the broker so that you can get paid. An ETF, again, you can easily rebalance that in your portfolio and trade it daily.
Mm.
Another advantage of getting exposure to gold through an exchange traded fund would simply be the cost. It's a much more cost effective way to do that. Typically, anytime you're buying physical metals, whether you're buying those from a broker or picking them up at Costco, which is funny, Aaron, that's the only thing my wife hasn't brought home from Costco is gold bars. But if you're buying those physical metals, you're paying a markup, you're paying commission, sometimes steep ones.
Right. So what if maximizing the growth of my investments is my priority?
If that's your priority, I would say you want to pay close attention to dividends. And here's why. So if we look at the performance of gold over the last 30 years, we can see that gold's gone from about $370 an ounce up to more than $1,800 an ounce. Okay, that's about a 400% increase. But over the same time period, the Dow and the S&P 500 have increased more than 800%. But even that doesn't tell the full story, because this chart, it's just measuring the change in the price of those assets. Well, if you're an investor in equities, you're not only benefiting from the capital appreciation or the change in price in those equities or the change in price in that index, you're also receiving dividends each and every year. And if we go back to that chart and if we look at the dark black line, that index, that's large cap stocks, including the reinvestment of dividends. And while gold over the last 30 years has had more than a 400% increase, the S&P and the Dow have had more than an 800% increase. If you take into account dividends, you're looking at more than a 1,500% increase.
Wow, that kind of puts it in stark relief then, doesn't it?
You bet. Yeah,
That's why, Dustin, you provided the chart.
Yep,
That'll make
gold
sense.
makes perfect sense as a hedge in a portfolio, more so than an investment itself.
Mhm. Well, this was helpful though to talk through, and I'm sure that there are some people who are a bit concerned about the headlines. If they want to talk through whether their portfolio can withstand any upcoming volatility, what's the best way to reach you?
Yeah, they can text me a question at 830-476-2505 or reach out on the website to book a free chat at longlivemymoney.com.
All right. Dustin, thank you so much.
Thanks, Aaron.